the last few times that you have joined us here on News9, it's been on days of sharp corrections. Last time you were here, Nifty was down somewhere around 200 points. Today it fell somewhere around 400 points. And you, for one, repeatedly have said that the market needs a major correction before it can resume that next leg of up move. Is this it, or is there more pain left for us in the offing?
I mean, I was about to say that because I was just looking back and saw that every time I appear on a channel, it's just after a major fall. I think the last 2 or 3 times it's happened. But I just hope it's just a coincidence and may not happen next time. As far as the markets are concerned, yes, I think this fall was overdue. And I think, like I've been saying, the valuations were very high and possibly it required a reason to fall. And the reason came in terms of this geopolitical issues. I mean, in the past, we have seen the Red Sea issue, which was there, which was put behind us. And then this morning, it was Iran, shooting missiles into Balochistan and Pakistan. So I think that is what shook the markets. But before that, overnight, we have seen that the global markets are down. So because of which the Nifty was showing a cut of 200 points to start off with. But then that increased because of this geopolitical issue which happened today. And to top that up, we also have the US Fed interest rate, which they're talking about now much later than what it was expected earlier. In fact, we were expecting it would happen in the first half of 24, but now it seems it'll be possibly in the fourth quarter of 2024. You look at the China economic data, I mean, that was lower than expected. So I think that was another reason for disappointment. And to top all this, we had HDFC Bank earnings, commentary from the management, which I think, and the interaction which they had with the analysts and investors, I think that was a bit disappointing. And because of which we saw that major cut in HDFC Bank, which again, like you rightly said, it's about 14% of the Nifty, and it's close to I think about 41% of the bank Nifty. So the weightage is decently high, and that also weighed on the index overall. But then the question is whether we will see a further cut like this, because I mean this sort of a cut. Yes, I don't think too many people would have been shaken up very badly because I mean they made enough money in the last 18, 24 months. But in case we see similar cut for the next 2 or 3 days, I think that's when we could see some amount of panic from, these investors who are decently new to the markets. So that's got to be seen. So if the markets hold on for tomorrow, day after, then I suppose we would have seen this fall and then some bounce back from here. But a further cut from here could be quite deep.
All right, and I want to spend some time on what went on with HDFC Bank because the numbers, at least the headline numbers, they look pretty much in line with, what the street was expecting.
Right.
But, looking under the hood, especially on the margin front and the LCR front, things are looking a little frothy for the company, isn't it?
Absolutely, because I mean, we thought that the issues which were coming up because of the merger with HDFC. I mean, we thought that that would have been like over as of last quarter, and this quarter could be a much better sort of a scenario. But now, from the discussion which the management had, it seems that the issues will continue possibly for the next 2 or 3 quarters, and they will have to increase their retail deposits, and that will surely come at a cost. And that cost will also weigh on the NIMs, which have been falling quite sharply. So, I mean, basically, on like whichever parameters you look at, I mean, because of which HDFC Bank was getting their premium valuation in the last 2 to 3 decades. I mean, that's gone for a toss, at least for the time being, and it's hopeful that they'll come back on track. But we were expecting them to come back on track this quarter, which is not happening. So I think it'll take a bit more of time. So I think we could see some further cut in HDFC Bank. But I mean, what I would say is for a long-term investor, I think that'll be a good opportunity to buy at lower levels.
All right, and as you can see on your screen, sir, a lot of other banks also, took a big cut today. So do you think that this is a bank-specific problem, or can we expect similar issues in the quarterly results of other banks as well?
No, I think this was a bank-specific issue. I think, like I said, this was because of the mega merger which was there with HDFC, which has created this issue for HDFC Bank. I don't think you'll see similar issues as far as the other banks are concerned. But what I've been maintaining in the past, that as far as NIMs are concerned, I think we have seen that top. And clearly, getting more deposits from the retail for the banking sector is going to be a bit difficult, looking at the way the markets had performed, at least till yesterday. And a lot of savings were actually being deployed into the markets. So that was another challenge for the banking space. I think that will be there for the banking space overall. But then, like I said, HDFC has a different set of issues which should not be, related to the rest of the banking space. And why did the other banks fall along with HDFC? Because you have the bank Nifty falling, and there are a lot of people who do arbitrage
Right.
between. There are a lot of larger institutions who do arbitrage between bank Nifty and the individual banks. So I think because of that, we also saw the, rest of the pack also falling.